Hey traders, so back to another short lesson. So in this video, I just want to simply talk about why is it so important to have a simple and repeatable process. So if you have been following my channel for a long time, you'll know that the way I trade have always been extremely simple. Although I do have strategies slash patterns that I created myself, such as the TPF, the rollover, things that I back tested and developed many years ago. But besides that, if you look at the way I trade, if you've been watching my videos along the way, you realize the way I read the market is extremely simple. I plot out my key daily levels. I focus on price position. I focus on pattern recognition. That's it. You will never see me talking about how can I predict the market. And here goes to one important thing why speaking with so many traders. I've spoken with hundreds of traders. How many of them? I don't know. I lost track, but hundreds of them. Many of you also do text me on my IG asking me on different questions as well. But one thing I can just straightforward and tell you is, if your concept is overly complicated, if it's something that requires you to do a lot of anticipation, you are not trading. You are predicting the market. There's a big difference comparing an analyst versus a trader. And that's also why when you go onto YouTube, you see nowadays there are so many social media traders, so many influencers that they don't show any credibility. They just spread or share someone else's concept. Let's say, oh, this trader A, he's famous, he's popular on YouTube, he's trading ICT, and then he just share his ICT understanding and just say how profitable he is. But in actual, does he have the result or not? That's the big question. Because everyone can be like an analyst. Everyone can sound like they're an expert without showing the actual result. To me, what really defines a good or highly profitable elite trader is his execution and his discipline. Like I said, everyone can sound like a professional, can sound like an expert when they're trying to draw different lines, draw different patterns on the chart. But what defines a good trader is not just about predicting. I've seen some traders, they like to do things like predicting. I want to do this, see price coming into my fair value gap, then I go short. To me, maybe for some of you it works, but the way I trade have always been, I want to see price do certain things, then I react to it. I'm not those that I will try to draw different arrows, different line and say, if price does this, if it pulls back to this specific level, I'll be looking to do this or that. No. When I go to the market every single day, I approach the market with a complete fresh mentality. So I remember when, let's have an example. So when gold printed a TPF formation around 757, that's when we started calling short on gold, because we broke below the structure and we are showing signs of rollover plus exhaustion breaking under that 2757 level. And that's when one of our traders in our trade club, he caught the short based on our game plan. Like, all these are again based on reacting to the market. There's something that I always say, which is, you can be 1-2 steps ahead of the market, but if you're 2-3 steps or 4-5 steps ahead, you're dead. Unfortunately, again, you may disagree with me, but almost every of the SMC ICT traders I've spoken with, they love predicting the market. I'm not trying to say it's wrong, but to me personally, I don't recommend it. Remember, we are a trader. So what's a trader? We assess various market opportunity and we react to what market is really hinting us, what market is really telling us. If you get overly anticipative, again, you are an analyst. you are not a trader anymore. And that's why on my channel, I always tell all of you, just because you see, you know, some traders, they're good at analyzing the market, they're good at telling you, oh, if price breaks above this area, I'll be looking to go long. If it breaks below the level, I'll be looking to go short. If it swept the low, come back to my fair value gap, I'm looking to do this or that. These are just analyzing the market. They are essentially it's just predicting the market. But when it comes to actual execution, did he take the trade or not? How's the outcome of the position? What's the thought process behind it? What's his trade management like? Did he scale into the position? What's the grading system? So in order for you to really become a disciplined trader or a highly profitable trader, there are a few things that I care a lot. First thing, what determines a good trader? The first thing will be his grading system. Every single of the highly profitable trader I've spoken with, they always have an extremely rigid grading system. Why? Because they know that in order for them to make money in the long run, it's not about catching the high win rate. It's all about how can he make sure that his winner is significantly bigger than his loser. And that's what I do. You know, sometimes people say, hey, how can you become profitable? What do you do differently? I don't do anything different. I simply increase my pain threshold. So when I see market presenting high quality opportunity, I embrace it. And if you refer to my latest video where I did a 15k Aussie dollar recap, and I actually did a live 17k withdrawal, and I also at the same time did a $19,000 withdrawal. So these are all essentially proof that, you know, the way I trade works. I'm not trying, I'm not here trying to show off, oh, I just withdraw $19,000 into my PayPal, then also from my PayPal to my bank account. That's not the purpose of that. The purpose is to tell all of you what determines a good trader is him proving his system is working through his very careful execution, by sticking to his game plan, by sticking to his words, by staying disciplined, and actually the market is giving him feedback, positive feedback, which is gaining P&L. And if you hear what I just said, the P&L is always the final part, because you can only make 5-6 figures a trade when you have a solid grading system, when you know exactly what you're doing. So back to it, what really determines a good trader? His grading system. To me, grading system is one of the holy grail that turned me into a profitable trader, because every single time before I get into position, I have a clear process and I have a clear framework. In our trade club, we have two different frameworks. One is called the KWMNN. Sorry if I say here, you might be confused. And we also have another framework called the it's the HMPPE framework. So within our trade club, I actually shared these two simple framework. KWMNN helps trader to identify what's a real support and resistance. How can you lean your entry towards the high probable entry level? And also HMPEE is a 6-step process. We used to be HMPEE, but this year we had a revision. So yeah, we changed it to HMPPEE. And HMPPEE framework is there to help you to identify a high quality setup, the entire process, the entire filtering process. So remember, grading system is a must, is almost a cheat code for you to tell, hey, on this certain setup, this certain pattern, I know the probability of success is very high. So when I clearly know that, based on my backtesting, forward testing data, based on my constant review, and I'm allowed to bet in more size. When I first shared this concept called linear risk per trade system, some people, they disagree with me and they think, hey, how can you know what's likely to, what's good, what's bad? Even the good setup may fail as well. If you are a trader that still think that a static RPT system, risk per trade system, will make you money, I'll tell you the answer is no. You can make money with a static RPT system, risk per trade system, but in the long run, you realize that you're just near that break even. And I'll be just completely frank here. Don't think I'm here trying to say anyone else. I'm genuinely not. But any traders online, they tell you, I risk a static 1% per trade. I risk a static 1.5% per trade. That's because they are trading prop firms. Because prop firm has restriction. And they are lazy to do their work. If a trader clearly has done his back testing, forward testing for thousands of times, and he definitely will have enough data to tell what's a good versus what's a bad setup. So for people that tell you he has a static RPT system, risk per trade system, he simply do not know what's good, what's bad. He simply do not have a grading system. He simply are relying on prop firms. If you have a personal capital today and all you do is your B setup, you risk 1%. Your A plus setup, you risk 1%. You don't scale in, you don't do anything else. Then get prepared to lose money. Because on your lower quality, lower probable setup, you are risking the same comparing to those that really give you high chance of success. And I hope through this, all of you really understand the importance of an effective grading system and also having a linear risk per trade system. That means when you know, based on your filtering process, this is a high probable pattern, this is high quality A plus setup, you know how to risk a little bit more. And you know how to create a mid to long term plan on potentially developing a home run. And there goes to the next point. Maximizing winner. I won't talk about minimizing loser, because to me personally, most of my losses, they take a full 1 hour hit. So if I risk $5,000 a trade on this specific trade, if I get stopped out, I lose 5,000. That's it. You know why? Because some traders will tell you, if I cut in my loser a little bit earlier, I could have saved a lot of money. Indeed. But I'll just share one important thing, which is we have a stop loss at a certain level, because that stop loss is what we call a defense line or invalidation point. That means when the price hits my stop loss level, so let's say assume you go short on a double top and your entry is probably here on the rejection of the high, and that's your stop loss. When price comes here and you quickly break even the position, you are essentially just killing your edge. Or you don't even have an edge, you don't understand the pattern. You enter there because this is a POI. This is a point of interest. This is an area where we could see supply coming in. We can see passive sellers defending the resistance. The moment when you start moving stop loss to your entry, that's when you say, hey, I don't give a damn about the pattern anymore, because price always responds to level, to price level. The price is sensitive to price level, and price level is the only thing that the institutional level, the traders or the investors or the banks, they care about. They only care about price level. Do you think the institutional trader, they will sit there and say, oh, draw the FVG, the fair value gap, or there's a liquidity sweep? They don't do that. All they care is, if I want to short $1 billion, $10 million at a certain price level, how can I make sure I get filled? That's it. So when you start moving your stop loss unreasonably, unless again, the only time you can be moving your stop loss is when price have already done a significant break of structure and it doesn't make sense for price to come back to anymore, then of course feel free to move stops to break even. But otherwise, you're killing your position. So it goes back to maximizing winner. So a good trader may not be trader who has the highest success rate may not be traders who has 80% success rate. These are illusion created by the social media trader and some of the influencers on YouTube who don't even know how to trade, that tells you, oh, 80% win rate. I've spoken with so many good traders. None of them give a damn about win rate. You only give a damn about win rate if you are an algo trader. If you are someone who's on the quant or the algo side of the thing, which I personally know people who are on the quant and the algo side, managing 8 figures plus. They care a lot about win rate, obviously because of their HFT style, high frequency trading method. They need high success rate in order to generate a sustainable return. But for us as a discretionary price action trader, as a retail trader, I wouldn't care less about win rate. All I care is how can I make money? Just like you today, when you're trying to run a business, when you're trying to invest in different projects, would you try to say that every single of my business decisions have to be correct? No. Imagine today you are CEO of a company. Your job, you are being paid so well to make good decisions, to make that occasional high quality decisions that can yield high returns. There will be times where you make bad decisions. There will be times where you make good decisions, but the market proves you wrong. Can you avoid them? No, because if you're trying to avoid losses, you're inevitably trying to avoid winners as well. So don't focus on how can I get the best win rate. Focus on how can I maximize my winner. When I have a win, how can I make sure I increase my pain threshold? I embrace the pain tolerance, and I make sure I write my winner as long as possible. These are the things that you actually should have put more attention as a trader. And moving forward, every single good trader always have the mentality of fine-tuning and reviewing. And I tell you, most of the struggling traders struggle because they spend years and years making the same silly mistakes. They overtrade for 5 years, and they still keep repeating the same mistakes after 5 years. That's why every single time when I have any sort of students or traders joining our trade club, I always tell them, you can only become a highly profitable trader when you start taking on journaling to the next level, when you start constantly reviewing your position and perform monthly, weekly, quarterly, or whatsoever review. So I hope these short 4 points really help you. Sorry, my son is here again. So I hope this quick lesson really help all of you to really understand what determines a good trader. Remember, simplicity is key. You need to have an extremely simple system that is repeatable over the long term. And I'll tell you one thing, I couldn't care less about a strategy. I know strategy is important, is a must, but what I'm trying to say here is only when you start looking to fine-tune your existing system, your strategy, only when you learn how to increase your pin threshold to maximize your winner, only when you have a solid grading system to identify what's a B, what's an A+, what's a C setup, and then you start having a linear risk per trade system because you have put in so much work to know what's good and what's bad. That's when you start becoming profitable. The other day when I shared the concept of linear risk per trade system, someone say, oh, you can the only thing we can control is risk management. Come on. When I say having a linear risk per trade system, I'm not telling you to risk 100% on your good trade. You are simply increasing your risk by a tiny amount, but over the long term it compounds. Let me ask you, if I risk 0.7% on my B setup and I risk 1.2% on my A+ setup, it's okay. There's no way you can go out of the game. The key thing here for all of you to understand is to know what you are doing. For people who tell you to have a static risk per trade system, they are simply lazy trader to me. And they are high chance break even, small loss, or small win kind of trader. I have not seen any elite trader not focusing on having a grading system. Alright? So yes. So that's it for the video. If you like it, please don't forget to like, share, subscribe, and I'll talk to you next time.